Monday, October 7th, quick one-up video for you wonderful ladies and gentlemen. VIX was able to get up over and stay up over 1936 to 1940. Anything that now remains above 20.73, I think still risks higher prices, 23.08 to 23.76. And if we were to make it up to channel high, it's closer to 27. Anything back below 20.73 to me would be a look above and fail, and we'd likely come back down into the 1848-ish area. As far as SPY goes, day 13 of balance, I could even argue that it's day 15 of balance because the 9th and the 18th did test above that 565.16 level. That being said, we did hold the 20 MA at 566.27, and as long as we're over that 565.16, it's still okay. Below there does risk larger liquidation break, likely to 554.87 down to 553.41, and the 50 MA is right in there at 554.53. If we do resolve to the upside, the wedge high comes in at 580, so right up there. As far as the Qs go, we're still consolidating under the 78.6 of the range at 486.39. Bulls will need to clear that for still higher prices to fill the 716 gap at 496.34. Anything that remains below 486.39, I do think risks a move down to 473.82, but shorter term, we could use the 20 MA as our pass don't pass line on the downside, 479.63. A lot of downgrades today. Apple, Amazon, and Netflix. Apple has not been able to clear the 233-ish level. I told you if it can't, we do risk a move down to the 216s to 220s, and we're getting closer and closer every day. I think if you're short, you could use the 20 MA as a stop at 224.73. Anything up over that is probably a long, and over 225.69 I think would be a long for sure. Amazon's going to have another Prime Day. It stalled at the channel high back on the 24th. It does risk a move to channel low. If that were to take place, you'd be looking at 164s, but shorter term, there is some support at 179.22, which is the 50 MA, and the 200 MA is at 177.12. So that 176.41 to 177.12-ish area could be a buy the dip spot, or maybe a place to sell some out of the money puts. If you want to do some kind of $10 wide put ratio playing for that channel low, I'm good with that as well, maybe 1 by 2. You're dated though. I wouldn't go out past October, November tops. Netflix is okay as long as it can hold 697.49 to 700.99. Anything below that to me becomes problematic. We're teetering around that 20 MA-ish area at 703.05. Anything that is a little below there is okay, but we do like to be above there. And for the Mo Bros, they need to get back up over 711.75. If we do a full articulation down to the channel low, it's closer to the 200 MA at 617, so don't sleep on that. If you want to do some kind of $50 or even $100 wide ratio, I'm good with that. Tesla seems to be not acting so well. It stalled at the channel high. We are still above the channel low. I think that 237-ish area is a key pass don't pass line. I'd feel better back up over the 20 MA at 242.73. If you're short, you could use 244.24 VWAP as a stop. As far as Bitcoin goes, we are holding in okay. Bit of a topping tail in the RTH session and a bit of a bottoming tail in the after hours session. I think over 63,600 probably takes you back up closer to the 64 to 65,000-ish area. And if we were to lose 62,305, which is the after hours low, we could test back to as much as 60,095. The real reason that we've been seeing the move lower has been the reversion to the mean of the pain trade, right? Higher interest rates, higher oil, and higher dollar. If we do the full articulation down to channel low, you're looking at 93.96. There is a volume distribution node at 94.40. That area really does need to hold. If not, we're looking at a move down to the 92s. But if we do keep coming lower, I don't mind selling some out of the money puts. I don't think the 10-year is going to get up over 4.25. We're at 4% now, so there might be a little bit more to go. But I think that area will act as resistance. Obviously, the 10-year is not the TLT. The TLT is the 20-year. But I think it's a relevant gauge to use. And if we do hit that 4.25%, you might want to start nibbling on some TLT. As far as oil goes, we are pumping up pretty nicely. We did stall a little bit over the 200 MA. It is below it in the after hours, so 77.33 could be a stop if you're trying short. Anything that remains over 76.14, 100 MA, I think is okay. We're trading just below there in the overnight. I do think, though, 79.11 up to 80.77, which would be the downtrend, will be some resistance. XLE obviously benefiting tremendously from this, but we did see a nasty topping tail around that 94.14 reference high. Be on guard for a lower high tomorrow, and anything below the RTH low at 93.20 could be a short down to 92, maybe even 91.35. But if 92 can hold, it's still all right. Generally speaking, we are in balance here. We did see a reload in put protection into the new quarter. We have the election coming up, and there's a political uncertainty with what's going on with Israel and Iran. I do think if that war heats up, it could continue putting pressure on oil. I like using the opportunity of pullbacks in the VIX to put on protection. I had been saying this a couple of weeks ago that it was a good opportunity in the 14s, 15s, and 16s to buy put protection for end of year rally or potentially pullback, so we'd be hedged against it. That turned out to be correct. I like using up opens to trim gains, raise stops. Keep an eye on that 565-ish level in SPY. If the bulls can hold there, it's still fine, but if we lose it, a lot of longs for 13 to 15 sessions are going to be trapped up there, and we could see that larger liquidation break down to the 78.6-ish levels. Same thing in the Qs. That 78.6 needs to clear, or we do risk a move to the 61.8. It's fib to fib, MA to MA. Keep it super simple. That's it.